going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of ideas and opportunities for you throughout the show. Well, this is a week that I'm not going to forget. There are a lot of weeks in my long trading history that I can remember pretty clearly, a lot of important days in the market. October crashes in 78 and a mini crash in 79 and the crash of 87 and of course 9/11. And now I'm going to remember Election Day of 2016, the day when Donald Trump was elected president, and overnight the Dow Jones Industrial Average fell 800 points, only to recover and rally over 300 points for the day, an 1,100 point range. Pretty similar action in the S&P 500, down over 100 points to rally to plus 30 points. It was an amazing evening, and for those people that trade overnight and dared to step in, some pretty big opportunities. For those people that that don't, well, they kind of wish they had those opportunities, because there was some great buying opportunities in there that, well, a lot of people just didn't get to take advantage of. So now Donald Trump is president-elect, and I can stop worrying about Hillary Clinton. Man, I was worried about that. But now I can start worrying about Donald Trump, as he has a pretty aggressive 100-day agenda. First 100 days, I'm really sure. And I hope that one of his top items on the agenda is tearing down the Federal Reserve, taking the power away from them, because you know how much I believe that the way they manipulate markets and economies has been nothing but destructive. But I don't actually think that's going to happen. I'd like to see the audit the Fed, or the fire yelling movement start to come on, and start to put somebody on that was ready to do some more responsible governance. I have a feeling that's not going to happen, though. There's already rumors that he's going to keep yelling on through her term of February 18th, and that will really disappoint me. But he doesn't do anything around what my desires are, and I have a feeling that's the way it's going to end up. So sad to hear that's the case, but that probably is in line with his desire to do massive stimulus, fiscal stimulus, that is, a lot different than the monetary stimulus that we've seen all these years. And that's going to look like what he says is $1 trillion spending on infrastructure. Amazing how these liberal ideas are the ones that we're getting from a Republican president-elect. And of course, they're not that much of a surprise. Maybe the size of them are, and you gotta really wonder about how much of a conservative Donald Trump really is. Anyway, that's probably the reason why we don't have a whole, right now sense of a lot of deflation coming, which is what I thought would happen as Donald Trump starts to get things going, and that still might be the case as we move forward, as gold is absolutely crumbling. So there's huge reallocation shifts going on, and big movements in the market as, well, you've had the investors, big asset managers, get caught leaning here. Everybody knew Hillary was going to win, and of course that wasn't the case. So we've had this crazy moves going on in the markets right now. When you look at the net changes in the S&P 500, the NASDAQ, not very much, basically up a little bit on the week, but man, they were down a lot. And of course, you had that big overnight swing. The Russell, the third tier of the market, getting a ton of buying, up over 3% on the week. So really strong as far as that goes. Now, the emerging markets, they're getting annihilated. Of course, Trump's anti-trade policies are terrible for them, and he wants to go after Mexico. We all know that, and the peso collapsed 14% on the week. Brazil going down sharply. India, which has their own problems with all this black money and changing the currency over and people standing in lines to get their cash, that is another problem. So India getting hit and South Korea getting hit. And the Eurozone kind of holding steady in there, but basically world markets pretty shaken by all of this. Lots of incredible movement going on in these markets. So stock market modestly up on the week, and that's could have been a lot worse. The dollar super strong as interest rates rise, and the thought is that when interest rates rise, that attracts currency into the country that the interest rates are rising in. It really all depends on the comparison between other markets also. And I actually don't think that this dollar advance that we're having right now is going to last all that long. But right now we have it, and that's really what's sending gold very significantly to the downside. So we get this big move to the upside in the dollar. And are those horns for me? And then gold moves and silver moves. Well, gold basically collapsing. Gold has a major breakdown. I'll talk about that later on in the show. And I plan a big picture video, which I'll discuss later when we look at the precious metals markets, which I'll do in the next week. So gold, which rallies up to 1338 in the panic during the night when Donald Trump gets elected, falls to 1230, $108 range on the week, down 80 points on the week, net approximately as we get to the end of the trading session here on Friday. Silver down from $19 down to about $17.80. It's down 35 cents on the week, not so bad. It is stronger than gold, and that's because it is more of an industrial metal. Of course, speaking of industrial metals, copper exploding, just a massive weekend there. The oil market, very weak, a lot of disappointment about not getting a strong deal out of the producing nations. And the IEA report was bearish, talking about glut continuing into 2017. And then Iran says they're just going to keep raising their production levels because, well, we thought they would want to do that because they want to get caught up from all of those years when the U.S. was pressuring them with all the problems that we've had. Gotta wonder what Trump is going to do with that Iran deal, right? There's so much out there we're going to be talking about. Oil on the weak side, a couple percent. Bonds in total free fall. The TNX, the 10-year, has a range of 1.70 to 2.12. That's just a huge range, huge gain in interest rates for the week. ZB has a 7-point drop in there, and we've been bearish on the bond market, you know that, and spot on as far as that goes. So bad week for bonds. These huge week in the markets are huge swings in the markets that we've seen this week are very likely to continue. There's been this big asset allocation moving from what was the new market, essentially all of the techs, money being poured into Amazon and Facebook and Google and all of those. There were investors very comfortable in those stocks, right? Well, then when they realized that, well, that isn't where the money's going to be made anymore. It's going to be made in industry. It's going to be made in materials. It's going to be made in the shippers or the railroads that ship all these materials, or the engineering companies, or all of these companies that, when the fiscal policy does change, if it changes, then they will all be better for it. So we have this huge money pouring out of these techs and into these other companies. I think it's been overdone actually this week because we're a long way from the first 100 days. So I think we're going to see a lot of two-sided movement in a lot of these stocks along the way. but that is likely to be the trend overall. Don't forget that Donald Trump's target was, China, Mexico, India, the places where labor is cheap, and that the access to that labor is likely to not change, to the better for those countries. In other words, Donald Trump might make it so it's harder to go over there. But he's also going to bring all of that money in, right? A couple $1 trillion, make it so that there's not very much tax on all of the money that's in other countries. So, that's highly stimulating. Tax rates going down, if they can get them down as low as his original program, that is highly stimulating. So you got to wonder why gold's going down, because everything else is starting to act like inflation and high growth is on the way. And the truth is, it probably is, because these are the policies that really do stimulate growth, not policies like we've seen over these last 8 years. And I think it's going to be some boom times for certain industries and some really, really rough times for other ones. And we're going to see that, and have started to see it reflected in the stocks. I actually think we're going to see new highs in the stock market here as we get towards the end of the year and maybe into 2017. And then I think 2017 is going to be a riskier year. But I'm getting ahead of myself because I'll be doing some big picture analysis on the stock market too before long. Let's take a look at the 60-minute chart of what happened in this last week as we have seen the market do the classic roller coaster pattern. What is the classic roller coaster pattern? Well, here it is right here. As the markets had a very, very nice attempt at a rally starting on Monday. This is really old news, of course, that Comey over here said that Hillary wasn't in any trouble, and we saw 45 points up in the S&Ps. And here is your roller coaster ride. You climb the hill, you take the big plunge when Trump is leading, and then get the big breakdown. 100 points, and then when he gives this really gracious acceptance speech, the market starts to rally back and climb that hill again, and there's your roller coaster, and then easing back through Friday. So a lot of news in here that is almost completely not relevant at all, as you see, the new, this is the old, everything that's old up till this point, and this is everything that's new up until this point. So what do we get late in the week here is that you get some good follow through in here after the Trump win. But here you could see what happened on Thursday. NASDAQ drops 3% during the day. That was a huge decline. While the market was going up, it was really craziness. And we've had this really mixed market right there. So world markets on Thursday really surged as this massive reallocation has started. But the market was extraordinarily mixed in there. And the same thing for Friday. There's some correction in the stocks. Gold, silver, oil, all going down and weighing on the market, actually, you can see in here, as some corrections do come in. Stocks like Caterpillar giving a little bit of ground back on the downside. But overall, the market is immensely strong, and the Russell is up 1.5%, while the S&P 500 is down 0.5%, getting here late in the day. So there is a lot of buying coming into the third tier or speculative tier of the stock market. So this doesn't show you at all what the Russell's doing, which is just having a huge up day comparatively. Take a look at our calendar of what is coming up in the next week, and you can see here that, well, the earnings reports have really slowed down. Mostly a lot of retail stuff still coming out. I'm going to talk about Best Buy a little bit later in the show as those earnings come out Thursday. And we got Walmart Thursday morning also, and Target and Lowe's on Wednesday morning. So really bigger focus is on retail this week. As far as the news coming out, no giant market movers unless the consumer price index has a really big move in there. I don't think you're going to see a lot of movement as far as that. Take a little picture of this if you want to have this up on your wall there, and you want to know what's coming out during the week. So that is our look at what happened and the trading during the week and our calendar. I had asked last week about the different segments that I do and whether or not I had left out best and worst of the week, and had asked people to let me know, what was their favorites, and it was overwhelming that I got emails like crazy telling me that they love the best and worst of the week. I didn't even know if anybody watches it, to tell you the truth. I figure you watch my short-term view more than anything, and maybe my opening. But it's incredible. Everybody loves the best and worst of the week. So by popular demand, it's back. And I'll be right back with the best and worst stocks. Best of the week, not as many earnings reports as we've been getting. We're winding down on that season. Plenty of big movers, though, as this massive asset reallocation just keeps going on. Of course, President-elect Trump talking about spending $8 trillion on infrastructure, so that's affecting quite a number of groups also. And those groups that would have benefited from Hillary Clinton, well, they're not benefiting anymore, and the huge switch that we're seeing here into what we would call old world industry is really moving a lot of stocks. We're going to look at the steel stocks, the material stocks, and the biotechs, drugs, retail, and finance here, as those were really the big movers. The biggest mover of my whole universe of stocks was U.S. Steel. Now, this is a stock that we thought would underperform a group that we thought was positive. So, and the analysts actually hated this stock. U.S. Steel, the biggest mover, 22% on the week. And this thing doesn't seem to even want to stop. As I do this, and we are trading right now at about the highs for the week. This is my chart, of course, on cycle analysis, a weekly chart. And you can see that it's been in, well, kind of a big uptrend, right? Pretty clear right there. And in this green rising phase. Now, it was rallying in this phase and going nowhere, but then everything changed just a couple of days ago as the election now has got all of these material stocks being bought pretty strongly. Steel's giant movers in here. U.S. Steel, 22% up to this pretty powerful area of this intermediate 78.6%, this last cycle peak up here. So this is around 25, this is around 27.5. So that's really the area I expect this stock to stop and pull back. It's pretty well along in this cycle, and you can see our forecast is that we expect this stock to roll over soon. So that is the cycle forecast, and you can see in here that when you get into the the last third, as you can see right in here, well, we're not quite there yet, but you get those pullbacks right there. You can see that right in there also, right in here also. So this, we think, is really overdone, and I think before you know it, you're going to get some analysts downgrading U.S. Steel. So big week, but I'm not really favorable on this one. AK Steel up 22%, Steel Dynamics up 12%, and Nucor up about 14%. So really strong group there. Other material stocks, we did a special video back a week ago talking about the stocks that we thought would do real well after the election. No matter who won, but depending on who won would give us whether or not we got the buying opportunity if there was a big sell-off. Of course, that didn't come because the sell-off that we thought we'd get from Donald Trump only lasted overnight. A lot of opportunities missed. In that group was Cliff, FCX. Those are the material stocks that we thought would do really well. They were up 21% and 18% on the week. Let's take a look at those charts, and you'll be able to see the strength that was in here. So let's take a look here as we switch over from U.S. Steel to CLF, that is Cliffs. And this is, you can see that similar pattern to U.S. Steel, right? That upward channel that you see it trading up in right here, the higher bottoms, and now in this rising phase right there. We like this stock and actually think that it will get above this level into the 9s or 10s before this rally is over with. So yeah, there'll be a pullback because it's been a big week, and I think would be a good idea to buy the pullbacks in there. FCX, a very similar pattern. As you can see, it's getting right up to that important 50% level, 618 up here. And copper absolutely flying, right? So it's pulling back a little bit now, but this is a very bullish chart, and we're going to look for much higher prices in here. Probably it's trading now at 1370. I wouldn't be surprised to see 16 or 18 on this stock. So FCX, another good looking stock. Now the tech stocks did really poorly because analysts got caught leaning in there. Fund managers were comfortable in their Amazons and Facebooks and Googles and didn't realize they needed some money to put into some other old industry stocks. So they've been selling those like crazy. Though there was a couple of decent upside moves in tech stocks during the week. The biggest one, Nvidia. This was a 20% gainer on a huge earnings report. Let's take a look at that. NVDA. This is an example of a stock that has been so strong that the cycle analysis was almost unreadable. I've got these big cycle brackets that you can see on the bottom, and this low kind of gets right in line with this over here, this low over here. You can see that, this low over here. So those are really large cycles, and they have been, of course, in this uptrend. Note the 13-week moving average and how powerful that has been. This line right over here that's been trucking up is the Hull moving average, and in all the corrections it stayed upward in green. You hardly ever see this. And then look what happened this week, this monstrous move on the upside. As their earnings were huge, they're having a buyback. They have raised their dividend, and the Friday move in here on their earnings report, take a look at this on the daily chart, is the biggest up day in 13 years for Nvidia. This has been, as I showed you on the weekly, just trading up strongly. Note the slim ribbon here, buy signal right over here, buy signal right over here, as the, we won't call those buy signals. Those are positive momentum signals, as it has kept moving on the upside the whole way. Never a reason, technically, to get out of a long position in this stock, unless you just wanted to trade a little short-term overbought or oversold. But that was pretty hard. You can see this massive move in Nvidia. Let's talk about healthcare a little bit, because the biotechs, drugs, of course, Obamacare is going to be gone, and some version of something will be left. And with no Hillary Clinton around, her thumb on the healthcare stocks, well, that's over with. I want you to look at IBB. This is the biotech index, and this is the a pattern that really looked like it was basing in here, and then it almost got down to the low again. And look at this big up week right here. So we're looking for a move up into this area about 320. So this is just the first week up, and when, if you look in here, every time it turns up, like right here and right here and right here and right here, and you get the same thing here, you see, just 1 week up. Well, look how long these rallies were. I mean, much longer. So yeah, it's a big up week, but we got a feeling there is more of that left to come as the biotechs look a lot better. You had some big solid gains in there. Regeneron up a huge 19% for that really high price stock. Celgene up 13%. In the HMOs, in that same video that I did back a week ago, the one I really liked in there was UNH, United Healthcare. That one only rose 5%. The big gainer was Humana, HUM, is that one gained a big 13% on the week. Let's take a look at both those charts so that you can see right now what it means to not have Hillary Clinton around to extend Obama's policies. And this, you could see that big giant up week. Again, note, it's the first week up after a positive cyclical pattern. So now you're establishing this kind of a trend. You can see that. And the low, see these two blue timing spikes came right on time. And now we're looking for higher prices. So you get some pullbacks in here. I think that it will be a good opportunity. That is Humana. By the way, this was on my list of riskiest for the year. Of course, I had no idea we were going to have a Trump president when that came out. So it's now up a little bit on the year. It's been up and down a little bit on the year quite a number of times. UNH, now get a little picture of the one I just showed you. You can see the bigger uptrend here. I've got the colored phasing in UNH as it's been one of these green-yellow stocks, which means that it's a strong upward trend. And so the declines that you can see in here in the declining phases are only small. They don't last very long. And then you get longer rally phases, as you can see right there, and that's what we're in right now. That's why I like this stock better. But both of them look good, and this whole group now looks a lot better. 50% number is up at 150. The 618 extension is up at 154. That's where we think it's going. 150 to 154 are our targets in UNH. Another one that was on my list of my favorite stocks for post-election was Bristol Myers. I thought it was a very beaten up drug stock, and no matter who won, that it would have a big upside move. Well, go watch that video and you'll see what I said. But look at this, as the stock has about a 10% gain on the week. Solid move here. It gets up to this counter trend resistance that we had in there, that red line. This is going to be a problem area for the stock between 58 and 60. So right now trading 56.60. I would say that it's going to roll over, and I wouldn't buy it here. It's already had the big move. But if it did pull back, again, it's early in this advance, so I would be a buyer if it did have a pullback in there. So that's a look at the biotechs, drugs. They had these big moves. So another thing about what actually might be Helicopter Donald is with a lot of money potentially pouring into the economy, this is going to take some time. It's not going to be tomorrow. The thought is that the retail stocks would do better. Remember, they got pummeled, and they now had a really good week. The big mover on a great earnings report was Kohl's, KSS. Let's take a look here as we switch over to the chart on Kohl's, KSS. There we go. And here is what you see as a good earnings report, which comes right at a nested cycle low. So what do the nested cycle lows look like? Well, that's when a small cycle and a big cycle are coming down. And then when they reverse and go up, you get rallies. You see that right over there? Sometimes the rallies are so horrible that when they rally and can't get anywhere and break down underneath that level, you get a horrible break. Right now, what you got is what we call a right-hand translation, where it rallies and then sells off a little bit on the right side of the cycle and then turns up. This is week one of the advance, massive buying coming in. Now, cycles create head and shoulders patterns, and you have maybe a hard to read, but let's put it in here just so that you can see it. We're going to look at the left shoulder and the neckline, not what I wanted to do, right? Across over here. You can see that right there. So I'm taking that down to the distance of the head. Now what I'm going to do is I'm going to duplicate this and move it up so that we can get a target. Why is that a target? Well, generally the head and shoulders measurement is from the distance from the head to the neckline, right there, that you can see that, and then you get the same distance again to the measurement. So this calls for it to go to about $60 right there. It's trading at 53, and being that it's only the first week of the advance, and you can see our projection had it turning up, it just turned up steeper than we expected. That says to us that you do want to be a buyer of Kohl's. I was just going to show you Dick's, so why don't we do Deckers, DECK. So why don't we take a look at that, and you'll see in here, Deckers gets a 12% move, but you can see based on the pattern as we have it right now, we think that this is within a downward channel. So 12% move. While I like Kohl's, I don't like Decker's. If it gets above this level, above 64, it will heal itself, and it will be a much better pattern. As long as it's below that, we will believe that it is going to reverse to the downside. Nordstrom, JWN, is the next one we're going to look at. This was one of my favorite stocks a couple of years ago, loving Nordstrom Rack, and they didn't perform really well, and then when retail got slammed, so did they. But look at this magnificent pattern that's set up in here. Again, you've got something that looks like an inverted head and shoulders in here, but this is your positive cycle pattern. An early bottom right here, and the first week up, really a significant move in this major resistance zone right there. So we would expect it to give a little ground, but this is the first week up. And I wouldn't be a bit surprised to see much higher prices in Nordstrom either. That is JWN. Did a special video where I talked about the retailers and said that I liked quite a number of them. One of them also that I like is Macy's. You could see this positive pattern in here. Whenever you see these two blue spikes, right, like this, that says that we were timing the bottom right in that time period. And there you could see as it turns up really perfectly. If you want these charts, you can have them right on your TOS platform by becoming a level 4 member. So all you got to do now is look at this being the third week of this advance and say, man, 3-week advances, you don't see many of those. They usually last longer. So you want to be buying this one when it pulls back. And I think it would get a nice favorable entry when that happens. That's a look at Macy's. Also liking Best Buy, BBY. Earnings coming out this week. Analysts are worried about that one. They think that they're going to get some soft numbers out of them. The pattern in there looks like a turnaround to me. Not putting it up because earnings are coming out. Don't want to stimulate you too much in here, but you might want to check our video on the retailers that we liked, and Best Buy was one of them. All right, so let's take a look at the financials. Some big moves in here. Why the financials moving up? Well, it's yield curve, because when President-elect Trump, I have to practice saying that. When he won this election, the bond market had a panic for minutes, and bonds rallied 2 points and then sold off 7 points from the high to -5. We saw 10-year rates go from 1.7% to over 2.1% this week, and what we have in here is a steepening yield curve. So that means the banks can make more money, and we have this steepening yield curve because, well, what Donald Trump wants to do will likely be inflationary, and there's a lot of money sitting in bonds that now need to get into some of these stocks that they've been avoiding for all this time. So we have this allocation switch going on, and we have this yield curve thing going on, and that then makes banks favorable. So the biggest gainer of the week was Wells Fargo. Wells Fargo was one of the stocks of the bank stocks that I said that I would avoid because the pattern looked so ugly. Well, it got a lot better. I mean, I liked a lot of them. Wells Fargo was just not one of my favorites. And you can see in here this massive upward move. I mean, for Wells Fargo, this is one heck of a move. As you can see, just giant week in here. Because it got above this levels right there, I mean, this is perfectly healed itself. I mean, they still have problems, but if you get any kind of a dip in here, and we sure believe that the market will get a little bit of a pullback because we think a lot of this is overdone, and I'll talk about that in my short-term view coming up. This is just really amazing recovery. Didn't like that one. Some other ones that I did like, however, that were in positive patterns. Take a look at Morgan Stanley. Morgan Stanley had its whole correction in what we call a kind of a high, tight rectangle right in here. So in other words, you notice this one here, and I have the XLF in there also, so you could see how it tracks. When you got this decline in here in this yellow zone, it was a pretty recognizable decline, right? This one, as a matter of fact, broke down and got into a red zone. You see you got a big decline. This one right over here, I mean, in this corrective period, you got nothing on the downside. So in the window of time that you should be getting a correction and you don't, it tells you about the strength in there. Well, you can see the immense rally in here. It's gotten up to this major 78.6%, and we believe it's going to move well past the recovery highs over here, which was at around $41 and that 100% fib extension. So we could easily see this up in the mid 40s because this is really feeling like it's just getting going. So up 13% for the week in Morgan Stanley, Goldman Sachs. These are giant moves. They're up 12%, moving through that 127% extension. I mean, this is really some significant moves when you look at that, and it's hard to say anything but how spectacular it is. Now, note the establishment of the bottom. Here's where you had this kind of base that was built right in here, and here you had this positive cycle pattern right in here. You see how much higher the bottom was, and then that establishes the uptrend, and now you get this immense move to the upside right there. So that is really a look at a very, very powerful pattern in there, and we wouldn't be surprised to see, you know, a pullback of 4 or 6 points. And we think that were that to happen, it would be a good opportunity in there. Other stocks in the financial category: Bank of America up 11%, JP Morgan and PNC and KeyBank all up about 10% on the week. So you could see financials had a big week, and it's amazing, you know, when you look at all of these big moves, how investors, you know, they find themselves underinvested in a specific group, and man, they all pile in at once. So we've seen some extreme moves in here, and that's likely to mean that there's a rest coming in some of these stocks. And when that rest comes, because we've seen how powerful these patterns are, I think really you've got to lean to the long side, and some of them I just showed you that have these really powerful patterns set up in the material stocks and in the biotechs, drugs, and the financials and retail. So all of those groups look to be like they're going to continue to remain on the strong side. You'll get days where they pull back and they look like they're done. Well, those are going to be the buying opportunities. That's the best of the week. I'll be right back with the worst. For the worst of the week, this is going to be a shorter segment because there isn't that much here. TripAdvisor, TRIP, gets hit pretty hard here on its earnings report. Take a look here at this sad breakdown as we look at this chart. 21% decline on the week. Now note this timing over here. See that right there? It says that this is where a low is going to be right there, time-wise. And when it gets underneath these cycle supports right over there, well, it's in huge trouble. This goes out to February right there. Bad, as their revenues had a big miss, and probably the worst performing of this entire group of online travel. So bad one right there for sure. It's in a lot of trouble. Hertz down 17% on bad earnings, bad guidance, analysts downgrading it. And I would say that one moves down to January. Next one we're going to look at on earnings reports is CVS. This one, we've had it in this negative channel, and you can see down 9% on the week. Revenues down. Their guidance was really bearish, so we've been bearish on this. And this one looks now, you can see, like pretty soon ready to turn up. I would say if that isn't the low, then the next week or two will come down and test that level. Remember, if you buy this one, you're trying to catch a falling knife. but we think that this is an extreme. Take a look here at the daily chart, and you will see that we believe in momentum. And here's where the negative momentum came in, up here at about $92. And it broke down from that pennant that you could see that we had marked in there, and then all of the bars turned red in the negative momentum, and you can see it just continued to move down from that $92 mark all the way down to about 70. So momentum is so important when you're looking at these things, and this one, it'll probably come down and test this low. Maybe that'll give you an opportunity to take a shot on it, because that is what it would be. We talked about all of the big winners based on DJT becoming president-elect. Some of the big losers were in the alternative energy category, because he's more interested in reviving fossil fuel, and Hillary Clinton was a lot more interested in continuing President Obama's efforts in alternative energy. The stocks that are in the solar category, of course, got hammered. Tesla was one of them, interestingly, as they're more of a tech stock company, so it got the double whammy of alternative energy and technology. So that one went down, but the couple that I'm going to show you in here are the solar stocks. SPWR, this has been a bad one, and when you see a stock in a red zone, so on the left is the weekly, on the right is the daily, and when you see a stock in the red zone, what that means is that it broke down underneath a pretty significant cycle support. So let's maximize this sell, and you can see it actually went into the red zone over here when it was $13, and then it makes a low of 6 this week. So as you can see, the timing for our low is now. So we think this is an extreme. Show you CSIQ, which has a little different pattern. Maybe another couple of weeks in here, and then I think you could take a shot on it for some kind of a bounce when they really get done punishing this group. This one, doesn't earn all that much money, though it does earn money. CSIQ is the one that I've always thought had the best value, but I believe that when it was in the 20s, and now it's $11.50. So this one has about another month to go in this declining phase that it's in. When it got up to this 34-week moving average, we were very skeptical it could get any further, and you could see it turned straight down from there. So that's a look at CSIQ. I want to talk about the precious metals and do a little promo right now at the same time. Precious metals have huge breakdowns. I'm shocked by this, trying to figure out, well, what exactly went on that got gold falling so hard and this whole group moving to the downside. Well, there's a few things. Maybe Donald Trump isn't all that bad, right? So that means the flight to safety bid is out of there, and that has stimulated, all of this has stimulated movement into the dollar. So you have this inverse movement between the dollar and gold, which goes on, and gold has had a big breakdown. So what I want to show you is GDX, and I'll show you a gold stock, and then later on in the week I'm going to have something a lot meatier on this sector. Take a look at GDX, and you can see in here what is a very large breakdown. Now we've gotten kind of an opposite pattern right in here. When I say that, what does that mean? So you see the long rally, and then the small decline, and then the long rally. That's these two cycles right in here. You see that? So when this one declined, you had a long decline, right? And then a short rally, and then a breakdown already. This points all the way out till March, April, before you get into any kind of a positive period again. This is really bad, breaking under the support, breaking under that last cycle low, breaking under this cycle low over here. All of this says to the downside in here for this group. And there you can see all of this list of the stocks in there. Silver, not quite as bad. It's really overperforming the gold market. But that is GDX moving significantly to the downside. I'll show you one gold stock, And then you can see in here the same pattern, of course, in Newmont that you have in the pattern in GDX. This is not a good pattern at all, and all of this sector points to a lot of trouble moving forward in the gold and silver stocks, all these precious metals. So I'm going to do next week a big picture analysis on the sector, looking at gold, looking at GDX, the gold stocks, longer term trends, and the silver stocks, and we'll probably end up looking at about 10, 12 symbols in there. Try to get a big feel for it. If you're not a member and you want to get that, for this weekend only now, we're running our special where you can get our level 3, which gives you our rankings and trade setups on the 81 best traded stocks, our option bias rankings, which is great for option traders, and of course our 8 different categories of videos where you have like 200 plus videos at your disposal to learn from my experiences and my analysis. So $43 for 1 month for all of that. Give us a try. I mean, how do you beat that deal? If you're interested, send me an email, slim@askSlim.com. Tell me you want the link, and I will send that to you. And comes Monday, I'm not going to do that anymore. So after Monday night, that'll be the last time that I'm sending out the link. So make sure that you, if you're interested in seeing the big picture analysis on gold I'm going to do this week, and all of our other videos, everything else, make sure you send me that email. That is the worst of the week, and I'll be right back with my short-term view. All right, short-term view for the coming week. Last week I did it a little differently than I normally do because we had the election week coming and there was no way to tell. I knew there was going to be big swings. I could kind of anticipate what would happen if Hillary Clinton was elected or if Donald Trump was elected. So I tried to figure out the 2 different directions and different points. Overall, I would just really rate myself maybe 50% on that. My feeling was that Trump was deflationary, and that would mean the dollar would rally and it would mean gold would go down. That was not the initial reaction, but it was actually the reaction for the rest of the week. Now, when you think about all of this fiscal stimulus that's likely to be coming on board, that's really what's breaking the bond market, right? So there's like this sense of deflation and this sense of inflation, and all mixed into what's going on in the markets. And truthfully, I'm having trouble sorting that out. So when I look back at what I said last week, it's pretty hard to figure how right or wrong I was. I was right on some stuff and I was wrong on some stuff. And what I was right about was that if Trump won, the market would fall very hard. But I had no idea that it was going to just come screaming back on that same day. So I would just plain out call that a miss. I thought that the bond market would get a pop on his election, and because everybody would be scared, and that would be deflationary. And the bond market did get a pop, right? But then you couldn't really trade it unless you were trading overnight, and then the bond market just continued to move on the downside, which is an inflationary scenario. So there's a lot of cross currents going on right now, and I'm just going to stick to these shorter term patterns when I look at this, especially when I'm doing this short term view, because we look at only the daily patterns. You know, when I say short term, to me that's daily because I'm a swing trader, though I do look at intraday patterns also, and we use that in a lot of our indicators. But this is really only on the daily chart. So we're going to look at light crude, the gold market, the euro, the bond and note market, the S&P 500, which is not totally representative of the market right now, and we'll talk about the VIX a little bit. Let's start out looking at light crude. Now we're going to start talking about next week here, as we've had some pretty sizable moves, but not so much really in the light crude market. So I have this set up to move in a little closer. So You can see what's going on. Now, I want you to see this big cycle pattern right in here. See that right there and this right in here? Well, that absolutely is a clear tracking of that cycle. You can see that? Now, there's some smaller patterns in here that are averaging 7 or 8 days. And here you see a 7 low right there. And then you had this 8 low, perfect, right? And now you have a rally of 3 days, and 5 days off of that, you're breaking this low. That's breaking the heart of the bulls, because that is a really bad pattern. So we call this a pattern breakdown, and we think now that we're going to get some rallies that fail, and we're going to be in a continued downtrend. The only way to change that, if somehow we get some news out of OPEC or somebody that they're going to really do something drastic, and man, that is not likely based on the current political and economic environment. So what we're looking for is maybe a day or two a little bit more down in here. See, it's in this very important support zone right in here. So you have a combination of that big support right there, which is probably going to give it some stability, and this big breakdown right over here kind of squeezing it. So what we kind of think we're going to get maybe a little more down in here, an attempted rally up to here, and then down again. So we think the bounce goes to about 44.50 and then fails. And we end up with a small net week up or down. It's really hard to say. We think that the week will end up somewhere in this range right over here, right about like that. So that's why we think it's a small week. After having this decline right there, we'll probably do something like that and then roll over. Small week is what we see in here in light crude. We have similar things going on in the gold market and the euro market. So gold often tracks the euro, so these are going to look kind of similar. So here's the gold market in here. The big pattern you can see in there, you know, I know there's really a lot on this chart, so I do my best to help you decipher what all of these patterns are in here. This dotted line you see right over there is the GDX. This is the gold pattern right there. This is the silver pattern right there. And this is the gold half cycle right there. And there's really a lot in here that makes a lot of sense to me as far as the rhythmic motion of the markets go. So you can see we had this big pattern right in here. That's that big cycle, right? And then we had the next rally right in here, which was bullish, but now you're breaking under the low, and that's a massive breakdown. I'm shocked by that, and I'm shocked by that in this particular environment that we're in. But what it is, and that is a big breakdown. So where are we right now on the short term is that we have a bottoming of this half cycle and the silver pattern right over here. We expect to get a small bounce. Yeah, a small bounce that will fail. So we're projecting it up to this minor 23.6% right there. That area is about 1243. The bottom of this declining resistance pattern right here is at about 1256. So we could see similar to what we just said in the light crude market, maybe a little bit more down in here, then getting this rally, but that rally is very likely to fail, and we would be a seller if we get that rally that we expect there to the 1243 to 1256 area. This is plain out stinky bad, and this is a breakdown that I think is setting up for some declining period out there that's pretty long. So that's the intermediate look, and this short-term look just says a bounce and basically a small up week for the week is what we're really looking at, because there's in the 5 days of potential trading, that takes you out to about here, right? So you get maybe a little more decline in this rally, and then this sell-off is in the following week based on the way that timing goes. So we're going to call it in gold a small up week, but overall a horrible pattern. So a bounce and a bad pattern. Take a look at /6E. Of course, we've had this big up move in the dollar market, and this pattern looks a lot like gold, doesn't it? It got the rally up and then started to roll over. Europe has got massive problems. I mean, It's and this big downtrend you're seeing in here is part of what's pushing gold up. What's pushing the dollar up is the fact that the euro currency is in so much trouble. And so where we are right now is similar to where we are in gold, right? We're at a point where we expect to see a little bit of a bounce. And then I would even say it's going to be a small week because maybe there's a little more downside room and then a little more upside room. Like this, that's the way that it looks. Even might be a little bit of an upside week. But when you get up into this zone, it's a screaming sell. So I'd love to see it to get up to 109.70 to 110. That's this, what we call a sell zone. And then looking for more move on the downside. Rallies fail, just as we believe will happen now in gold. And that is a bad looking pattern. We'll call it, though, a small week and likely maybe a little bit of an up week as it tries to get a bounce in there. So you can see these things not giving us a lot for this week because we don't really want to make the long side trades. What we want to do is wait for those bounces to make the short side trade. So I don't see anything that exciting in here. /ZN we're going to look at. We've been massively bearish in the bond market. We were spot on, and look at this collapse in here. As you got this move up right over here, that's amazing. It hit like my Donald Trump number overnight and then just collapsed. And then we have this pattern in here. So this is the 10-year, this is the 30-year. They're a little bit off in their patterns. We're about to get a bounce in here, and I think you're going to get a pretty significant bounce. This was a big decline. This is our declining resistance sell zone right over here. So it's around, we'll call it, that's 28.13 to about 28.26 right there. That's the sell zone. We want to see the bounce come in there, and I think we're at a point where you could see that we're about to turn up. You'll notice that our projection in here, that's this line right here, projects the bounce coming from this time frame right in between these two bottoms. So we're looking for a bounce there, and we think there's a good odds that we're going to get that. The bouncing zone in the ZBs, I might as well put that up for you here, /ZB, is right in this area here. You could see that, so we're pretty close right there also, and we expect it to get up to 159 to 160.08, and again, that's a declining resistance area, and right now that would be what we consider the sell zone. So that's a look at those markets. 4 of them that we're looking at in here look to us like there's bounces coming. They've been hit pretty hard, right? And that we're waiting for the upside bounces to come to sell them, actually. I'm actually long a tiny little bit of bonds right here because I think the bounce is going to be significant. But believe me, I've got my finger on the trigger, and it's not very big because it's such a counter trend trade. So let's talk about the stock market. Well, it's hard to talk about the stock market because there's several markets within the stock market right now. The NASDAQ extraordinarily weak relative to the other markets. The S&P 500 strong. The Russell immensely strong. I mean, that's really the way I would put it when you think of them in relative terms. So we actually think that what happened in the stock market is a bottom that came earlier on the intermediate pattern than we expected, all related to the skew based on the election, and that puts us into what we think is a rise to new highs in the stock market. We've already made them in some indexes, and the S&P 500 is very likely to make it. We've had some pullback going on here on Friday. We actually think that pullback is going to continue into next week for maybe 2 to 4 days based on these patterns. So here's the S&P 500. The patterns that we were looking at now are shot. Why are they shot? Well, the smallest pattern is not, but the patterns that we saw trading in here so consistently that you can see right in here, That's gone because this period of high risk brought you the election and this massive buying in here. So what we have in here now is this smaller pattern, and these patterns, which will still affect the market, pushing down. So we think we're going to get a move down into this minor support zone in the S&P 500, which we think is a buy, and that then you will get another move in here and take the markets to new highs. That's the way this sets up right now. It would be outrageous if this is an anomaly here and the selling gets stronger. If you break underneath the 2120 area, that will be a warning of that. 2120 is a possibility in this corrective period that we're looking at right now for the next several days. We think down like this and up is the highest probability. Down to here and then up is a little lower probability. Breaking below these levels is a very low probability based on what we're seeing in here. So we want to be a buyer in this next 2 to 4 days. It gets down into this support zone. Again, our target in there is 2144 down to around 2132. It's now trading at 2159. So that is not a very big decline when we're looking at some kind of a retracement in here. And again, the other indexes are so different that we the chart that we put up here in the S&P 500, it stands up on its own because these other charts look so different. The NASDAQ actually doesn't even have any kind of a look of a breakout. In fact, it looks horrible relative to the S&P 500 and has a lot more downside risk based on what we're looking at. So we think this mixed market that we're in right now is going to continue, and that's going to make trading challenging, actually, because you've got to know which index to look at and what to go for. I think that on days that if you're bullish and you see the Russell strong and you want to buy, you buy the Russell. If days that you want to be bearish and you see the Nasdaq or the S&P weak, you want to sell those. Make sure, because the moves are so extreme and the momentum is so powerful of these big switching of money by the fund managers, that you don't want to get on the wrong side of that. That's really an important thing to look at. Let's take a look here quickly at the VIX. Now, I said that I thought the stock market down a couple days, 2, 3, 4 days, and then up. Based on what we're looking at on the VIX on the daily chart, you're going to see a similar story in here. Here is the VIX, where we think while the stock market gets a bit of a pullback, the VIX gets a bit of a pop in here. Probably, it could get up to 16 again or something like that, but then we think it's going to roll over here in this period that we think the stock market will be strong and then move up to new highs. So, right now I'm, thinking the short term, intermediate term is saying things are bullish, especially all the stock patterns that I look at that are suggesting it. My bigger picture out there is going to be negative into 2017, so it'll be a whole different story, I think, then. So that's it. There's some changes coming up here that I just want to give you a little sense of. As for a year and a half, we've given this short-term view for everybody, really, and I know everybody has loved that. There's going to be some changes coming on. Well, some of this will be available and some of this will be available only to members. So you might want to start thinking about that and becoming a member so that you can get all of what I think has been really valuable information for all of this time. So that's it for Market Week. And again, if you want to take advantage of our special, $43 for just about everything but our charts, and for the next month, and you'll get a real good sense for what we have to offer. So send me an email, slim@askSlim.com, and I'll send you a link for that special. Only now through Monday night is the last time you'll be able to get that. So that is it for Market Week. Hope you have a great, safe weekend. It has gotten crazier out there, hasn't it? And we're always wishing you great trading.
Well, I'm going to sit